Okay guys, so welcome to today's video where I'm going to be breaking down the South African Rand and the key commodity exports of South Africa. So what we're going to be looking at in this video is for you to understand how to analyze South Africa, understand what commodity exports have a big impact on the currency and the currency markets, why the markets in the first part of 2020 was selling the South African Rand, why it got so weak against the US dollar, and then why once the South African stock market started to turn higher, did investors go back into the South African Rand, and why did the currency really pick up in its value against the US dollar? There's a really strong trend in the market at the moment. A lot of investment banks and the professional community are committed to selling the USD South African Rand exchange rate. And there's some fundamental reasons behind this, and I really want you to understand this and learn this. So I'm going to share with you everything I understand about platinum prices, interest rates between South Africa and the United States, stock markets, and this will really help you moving forward with understanding how to trade this currency based on this understanding. So let's go have a look at the computer screen. I want to break this down for you in more detail. Like, share, comment, and hopefully I'll speak to you soon. Thank you. Okay guys, so in this video we're going to look at the South African Rand and why platinum prices have a big impact on the currency. So what we're going to look at is the US dollar against the South African Rand. We've seen a lot of strength in the currency over the past few weeks, and we will continue to see more strength in the South African Rand if platinum prices really start to go up in value at a higher pace as they have been recently. So we can see that South Africa is a commodity currency because their main exports are commodities, and gold and platinum and diamonds are the key exports coming out of South Africa. So what we have to do, we have to look at the correlation between platinum prices, diamonds and gold, and we can start to see how the currency is greatly affected by these values in its key commodity exports. So what I want to show you is the correlation between platinum and the South African Rand. So what we can see is, let's first just see what happened with the US dollar against the South African Rand. When the coronavirus pandemic first gripped the global economy, we saw the US dollar really shoot up in value against the South African Rand, making up 37% in appreciation against the South African currency. Well, we understand why. That is because as stock markets started to fall around the world, investors were pulling their money out of stocks and they're putting cash in the safest place there is to park your money, and that is the US dollar. Why is that? Because the US dollar is the world's reserve currency. So if there's any currency you want to own in times of uncertainty, it is the US dollar. And that's why the dollar got really strong in the first quarter of 2020 when stock markets started to crash as borders were closed and the virus started to spread around the world. So what we can see is we can put on top of here the South African stock market, and as we can see from here, as South African stocks really dramatically decreased in value, investors were coming out of the South African stock market, selling the South African Rand to buy US dollars and parking their money in US Treasury bonds, or they was just holding the US dollar altogether. Whoops, sorry, let's go back. Apologies. Altogether. So the dollar was in a high demand. That caused South African Rands to be sold and exchanged to buy US dollars. The dollar shot up in value. However, then the central banks around the world all started to slash interest rates, all started to pump in monetary policy, spending, and fiscal spending started to be supported alongside central bank spending to try to stimulate the economy and help the recovery in growth from a slowdown that was being caused by the virus. Then you saw, once stocks bottomed, investors obviously had all these stock markets trading at record lows, so all of the biggest companies in the stock markets were all trading at a massive discount, and then investors wanted to go back into the stock market and get these undervalued stocks, because once you get a huge rally in price in the stock market in South Africa, for an example, as we've seen here, this is a really good opportunity to make money in the markets when you're getting stocks that are 60% lower in price than they were trading just a few months before. That's where you make your huge returns when you buy back these stocks. So as we can see, investors started to go back into the South African stock market, and then it was selling US dollars and going back into South African Rands. And then you started to see, as the South African stock market started to rally higher, the US dollar started to weaken and the South African rand started to strengthen again from the previous buying, because money was going back into South African stocks and South African commodity exports. So you can clearly see as soon as stocks started to rise, the US dollar started to fall because investors went back into the South African stock market. On top of that, we can also see platinum prices. When we look at platinum, same situation. When the market started to buy back platinum, because it's a key commodity used around the world, you can clearly see as soon as platinum prices started to rise, the South African rand also started to strengthen as well. So you can clearly see that if South Africa's key export is platinum, a lot of stocks within this stock market in South Africa will be affected by platinum prices. And that's the fundamentals, guys, behind why when stocks move higher, commodities move higher, the South African rand gets stronger in the currency markets. Alongside this, we had interest rates in the United States going lower and getting cut to zero, but interest rates in South Africa are much higher than the United States. So it's very attractive to be buying the South African rand instead of buying the US dollar when you're trading the exchange rate. So I've shown you guys before, and I'll show you again. It's really important to understand the carry trade rollover when you're trading one currency against another currency. So if we're looking at South Africa, what we can see is, from understanding interest rate differentials, interest rates in the United States are 0.09%, interest rates in South Africa are 3.64%. That's a big difference in interest rates. Remember, if I'm selling this currency pair and I'm betting the South African rand's going to go up in value against the US dollar, I first have to own US dollars, sell them in exchange to buy South African rands, and that means I'm paying out 0.09% interest on the US dollars I'm borrowing to finance the purchase of a South African rand, but I'm getting paid the deposit rate in South Africa, which is 3.64%, to own the South African rand. So obviously I'm paying out less on the dollars I'm borrowing and I'm receiving more on the South African rands that I'm purchasing. So the difference in interest rates means that I'm getting paid into my trading account over a 12-month period 3.55%. That's a big interest to be paid just to sell the currency pair. Even if the exchange rate doesn't move a single pip, you're still making 3.55% per year on that trade. Then on top of that, if you get a situation where the currency pair is then going up in value as well in your favor by 21%, now you're making 25% return on your money. This is why the markets are not buying US dollars against the South African rand. The interest rate differentials make it attractive to sell the currency pair, because if I'm trading, for an example, one lot, I'm getting paid 10 South African rands every day into my trading account for holding this trade. But if I buy the US dollar against South African rand, I'm only receiving interest of 0.09% on the dollars I'm buying, but I'm paying out 3.64% interest on the South African rands that I'm selling. Then I'm obviously losing money. I'm losing 3.5% per year, and that works out at losing 10 South African rands per day. So clearly I don't want to be buying this currency pair. I only want to be selling this currency pair. And that's the fundamentals, guys, behind lower interest rates in the United States, stocks moving higher in South Africa, platinum prices increasing, and we know this is one of South Africa's key exports. So whenever you're trading the South African rand, we must always remember, especially in the currency markets, what is the interest rate differentials between two currencies, because this is going to have a big impact on which currency is more favorable to buy in an exchange rate. And then we have to understand what commodity exports are coming from this country to affect the value of the currency. So remember that, because it's really important to understand. This is a trade that my members are in at the moment. We're selling this currency pair. We've got a technical trend line. We've had a third resistance and we've broken lower. So this is the reason why we're in this sell position. And this is a trade you can come trade alongside me and my members if you want to trade this for yourself in the markets and understand where to get in and get out at this moment in time. So I hope that makes sense, guys. That's a short analysis on the South African rand, platinum prices, commodity exports, stock markets, and a big impact it has on the currencies. Thank you.